Good afternoon, everyone. I'm Peter Overton. We're about to bring you the latest news from the Reserve Bank as it hands down its monthly decision on interest rates. Certainly a fascinating day with $30 billion wiped off the market yesterday, and it's been a volatile day on the markets today. So as I bring in Ross Greenwood, our finance editor, Ross, in the context of what's going on, is the Reserve Bank thinking about this as we hover at 1.5%?
Absolutely they will be. The reason for this, the Reserve Bank making its very first interest rate decision for 2018, broadly expected to be on hold. That decision has come in, and as a result, the Reserve Bank has now officially said interest rates are on hold, fully as expected. But remember, the stock market today, Peter, has fallen another 3%. So the All Ordinaries Index, as we sit here, is down almost 180 points. It means on top of the $30 billion lost yesterday, it's nearly $60 billion wiped off the value of shares today. This increasing volatility means really the Reserve Bank has got not much option but to leave interest rates on hold. And the reason for that largely is simply because at the moment you've got a situation where interest rates are the reason why the United States market is falling so heavily, because they believe that interest rates in the US will rise. It's off the back of wages inflation numbers that came out last Friday. The concern was about inflation. When you've got higher inflation, you tend to have central banks like the Federal Reserve raise interest rates. This is something certainly the Reserve Bank is saying today. They believe the labour market will continue to strengthen here, and if that comes, so too will wages growth here in Australia.
Roscoe, probably one of our more fascinating crosses when it comes to the Reserve Bank interest rate decision, because it's been 1.5% for so long, but now so many factors coming into this.
And the argument also is, when will interest rates rise in Australia for the first time? Economists are seriously split on that subject. About half of them say it's going to be later this year, and the other half say it will not happen until 2019, and it will very much depend on the stock market and some of these other economic indicators coming out.
Very briefly, you mightn't be able to crystal ball, but do you think we're going to bottom out now in terms of the falls on the Australian share market?
Not necessarily. We could see this go on. I notice futures markets continue to say the US market will continue to fall. There are genuine fears in the United States about the impact of rising interest rates, because they believe if they start to raise interest rates more quickly, it could have a real compound effect not only in the United States but the rest of the world as well.
And the impact on the dollar, we've seen that come away from 80 cents in the dollar coming down.
And you get a sense that the Reserve Bank would be happy about that. The Reserve Bank is not comfortable with the Australian dollar above 80 US cents. It would far prefer to see it in the low 70s.
Hearing it from the best, the Nine Network's finance editor Ross Greenwood, the Reserve Bank has left rates on hold at 1.5%. On behalf of Ross and myself, good afternoon.
The 9 News app is here. When news happens near you, we'll alert you. The free 9 News app goes straight to the source you trust.